Hi, everyone. It's Kali Arevalo, editor of Institutional Investing in Infrastructure. Here with me today is Howard Luder, the investment specialist at RENAIO, just to talk about the case for hydropower investment. So, Howard, do you want to just add some color about your role at RENAIO, sort of what the company does, and then we'll get into it.
Well, firstly, Kali, thank you for having me. It's always a pleasure to speak with somebody who, follows the infrastructure space like you do. And just for those people who don't know who RENAIO is, we are an institutional asset manager and a pure play hydropower specialist. So we operate across 5 European countries, managing 32 run-of-river hydropower plants. And our focus is entirely on long life, essential infrastructure that provides a stable and continuous form of renewable power.
Yeah, perfectly put. And I really do appreciate you taking the time today. Like you said, I mean, hydropower is definitely something that a lot of our audience and people in the industry care about. It's obviously very important, but I feel like we don't talk about it enough. So I am excited to sort of get into it with you. So, why is hydropower not more prominent in investor portfolios today? Given that demand is so high, why does it seem like this market is so sort of difficult to access?
It's a great question. The bottleneck um, is access. It's not the appetite. They would like to get into hydropower, but the markets are quite fragmented. So the most of the institutions this we speak to, insurance, pension funds, foundations, they would love to diversify with hydro. But like I say, every country has its own regulatory regime. So Italy is different to Poland, and they have their own lease structures, their own grid rules, and you don't have auctions and data rooms. You don't have a ready-made portfolio of hydropower plants that you can just simply buy. So outside of the Nordics, it's virtually impossible in our market to buy a large package hydro portfolio. And why is that? Because the ownership is usually private, like families, municipalities, cooperative organizations, or small utility operators or other operators. So, and these owners don't sell through auctions. They really, you've got to have boots on the ground and be connected to those markets, be connected to those operators, and really eke out those opportunities from them. That's how to get it done.
Yeah, absolutely. And so before you had said that hydropower seems to be of a higher quality than other power sources like PV generated power. Just curious about your take on that. Why might that be?
Well, I think, let me start with the big picture. A lot of people talk about hydropower in very simplified terms. So it's actually one of the most nuanced asset classes within the energy transition. So I'm very glad that we can unpack this for investors today. Wind and solar, I mean, they're essential and incredibly scalable technologies, but there's one thing that doesn't change. They're intermittent. Their output depends on weather, time of the day, day or night, the kind of seasons that you have. And hydro is, I would put it as quality baseload power. So, and particularly run of river, which is what we do, just keeps on running and running and running. And what this does, it makes it the stabilizer in any renewable portfolio. So hydro produces smooth cash flows. It reduces the portfolio volatility and also the grid volatility. So just think about a real world example. A couple of months ago in the summer, we had the Iberian blackout, which is something that every country is totally afraid of, understandably. So their system had large shares of wind and solar, but very limiting stabilizing assets. So if they had had more hydropower in their mix, their grid would have had more resilience for them to allow those kind of dips in the power source with just less volatility, more inertia, and more continuity. So wind and solar provide scalability. You can build lots of it, but hydropower provides the reliability, and both are essential, but they play fundamentally different roles. So if you take a look, we are in an age where there is grid congestion right now. So hydropower has quietly become, if you like, the holy grail within the renewable mix that we've got.
Yeah, that's a very good way of putting it. And excellent points there. You mentioned the run-of-river hydropower strategy. From an investment point of view, how are run-of-river hydro plants sort of different from dam hydropower plants?
Great question, because I think when you talk about hydropower, people automatically imagine these massive dams or reservoirs, which kind of reshape the value, or the valleys, that they lie in. It's understandable, but they have been part of the energy history for a long time. But let me share an interesting fact with you. 80 to 90% of Europe's investable power universe consists of run-of-river plants, not dams. So, and from an investor point of view, they typically are very different in the way that they operate. So obviously both use water to generate power, but their mechanics and their risk profiles, as well as the ESG dynamics, just differ profoundly. I'll give you an example. So if I build a dam, it has and could have long tail environmental liabilities. Run of river has a far smaller footprint. The river is already there. We are not going to destroy the land. We are not going to change the eco culture. The only thing we need to think about is the fish, and that for in those kind of instances, we speak with the local fishing communities and organizations to make sure that we have the right ecological way to protect those sources of fish as well. So I think the other thing is dams require enormous capex. So, what we have with our different run of river installations is it's diversified across country, across different water region. And I think the other thing is that you with dams, you just have a huge project risk if it does happen to go wrong. And run of river is much more comfortable with everybody's ESG expectations. This is an Article 9 in investment class, so I think this is something very relevant.
Yeah, no, absolutely, that makes sense. I think, like you mentioned before, that sort of stakeholder engagement, that's an important piece as well. Um, I just wanted to know, sort of rounding out and scaling back, which markets are the most attractive in terms of hydropower, looking ahead to 2026?
I mean, the strategy hasn't changed. Any market that we go into requires lots of water, so strong hydrology, um, long operating histories, stable regulatory environments. So we don't like countries that carry political risk. And if you were to take a map of Europe, for example, you would find that precipitation and rainfall is very much in the greater Alpine region. So anything that is part of Central Europe, and understandably, that tends to be northern Italy, Austria, um, Poland, and even selected Eastern European countries as well, because all these regions have got long track records of water regimes, dense clusters of operational plants, and decades of history. So, if you look at it like a bond investor or you know an infrastructure investor, that is exactly the kind of scenario that they like: predictability. And I think one thing that's also interesting now is, like I said, there's also other countries like Slovakia coming around the corner, the Czech Republic, also here, steady pipelines, realistic prices. There's no point us going into a market which doesn't reward us properly, with the feed-in tariffs. And these countries, they get it. They know and they value independent power generation. They like that. So um, this is really where it is. Just in summary, you know, these big hydro plants that don't really exist is because there's not enough space for them to start with. But if there were, they would want to have large auctions and things like that. But this is not how it works. You've got to be on the ground, like I said before, and it requires lots of patience, local embeddedness, and operational expertise, because we actually operate all these hydropower plants ourselves, predictive maintenance, our own monitoring system, everything that ensures that we can actually improve that infrastructure asset.
Well, that's a great message to leave off on. Definitely markets to watch. Some great insights from you. So thank you again, Howard, for joining me to talk about this. As I said, it's an asset that is definitely important to the people in our industry. So it's nice to have a chance to sort of unpack it a little bit more.
Yeah, and thank you for that. I mean, right now, when you look where we stand in the world of volatility, diversification, investors need it, and there's real economic value that comes out of it. So we believe in a increased electrified future. That means that the value of baseload, predictable, long-lived hydropower is going to grow, and this is something that investors and utilities know that can take advantage of. So thank you also for inviting us to tell the story, and we look forward to catching up with you to tell it, how it's going again very soon.